Welcome back to the Futures Trading Hub. This is A2 Trader, and I'm here to walk through part 2 of the automated trading system. Now, this part 2 of the automated trading system is about optimizing indicators and optimizing parameters of the strategy, making sure we have the best ones set so that we can actually make the most profit or the highest percentage of success available. I'll walk you through all that, and then stay tuned towards the end. I'm going to talk about what the next 2 episodes are going to be. And in those next 2 episodes, the reason I picked the indicators I want to go through in these next 2 episodes is because these are what give me confidence in a trade. I want you to learn that first, right? Because you can use that tomorrow. So it gives me confidence that I'm either on the right side of the trade or I'm not on the right side of the trade while I'm in the trade. So stay tuned. I'll talk to you about those, and then they'll be in the next 2 episodes. So let's get right at it. Okay, let's talk about, first of all, the snap review of the strategy operations. We'll also talk about indicator parameters and functions. We'll talk today, mostly the bulk of this will be about optimization. How do we optimize? What do we do? What's it do? What do we get out of it? Examples of optimized parameters. We'll talk about that. We'll talk about optimization intervals. And then we'll close with what the next 2 episodes are, just like I discussed earlier. Let's get started. All right, here we are. We're using an NQ H25 chart. This ends on February 3rd. Now, right now it's March the 7th, but I did a lot of this work back in early February. So now what I want to talk about today is optimization. I want to get you excited about optimization, and here's the reason why. I can tell exactly what size of moving average this needs to be, and it will change week to week. I can show you the profit I have right now with these 10 days. I could push this up 10 more days. Maybe we'll do that at the end. Push it up 10 more days, and the profit will change. The probabilities will change because the market changes. It gets different. And every Saturday morning, I sit down and I optimize my strategy, and then I use that strategy for the next 5 days. And then I sit down on that, and the following Saturday, I'll sit down and optimize the last 10 days for the next 5 days. And it's just a cycle like that. Now, optimization, first of all, your strategy is, you get to strategies by going to studies and then edit strategy. Right, so the strategy's already been installed. There's 3 of them, but there's only 1 that's on. So what we do is we like to go look at this, to look at the parameters that are customizable each week. We go into customize, and then here we have the name of the parameter, or the name of the actual the name of the parameter, and then we have the value that parameter is. Now, the high time frame moving average length, again, is a weighted moving average. It's right now set to 191. It looks back 13 bars on that moving average, and it looks for a threshold of 4. It's an angle. It looks for an angle of 4, above 4 and above. If it's above 4, it will be green, meaning it's a long trend. If it's between 4 and -4, it will be blue, which means it's a neutral trend. So I don't trade during neutral trends. I don't go short during long trends. And if it's greater than -4 or less than, depending on which way you look at it, if it's less than -4, then it will be red. It will be red, and it will mean I can take short trades, but I can't take long trades. So just explaining what those are, let's just go really quick to the chart, take a look at this. See right here? Okay, so as long as it's above 4 degrees, positive or negative, it will be green. It looks back 13 bars. This is a 191 weighted moving average. It will look backwards 13 bars, and it will then look at whether it's at 4, what degrees of slope it is. If it's greater than 4, it'll be green. If it's less than 4, but greater than -4, it will be blue. And if it's greater than -4, it will be red. So I do that with this one. We also have a short time frame moving average, which does the same thing. Now my strategy is paired up with an indicator that puts these on here. So the indicator itself, it has to be an indicator that paints the screen. The strategies won't paint the screen, so you have to you have to pair this with an indicator. We'll talk about that later. However, but if I want to find out exactly what size of moving average I need, exactly which size moving average I need, what do I have to do? Or does it really matter? Most people say use a 200 moving average here, and other people say use a 55 moving average for this, for the short time frame. Well, and the short time frame goes up this. Basically, it tells us when both the short time frame and the long time frame, that means it's got a powerful trend, and so that actually, when it comes back to the Donchi channel, I can take that long and make that profit. So let's look at this on the strategies. Okay, so there's another way to look at all these parameters as well. I'm going to have to close this out, but another way to look at these parameters is to go to your strategy report, and it's right here on the very end. These are the strategies these are the parameters in this strategy, and it has the same things here. You can take a look at those anytime you want. I can actually post them if you'd like, but we're going to get to these in your strategy later. I'm just trying to get you to have a picture of it. So let me go over here. I'm going to go over here, and I looked at HTFMA first. So let's show you how do you optimize. How do you determine what the best HTFMA length needs to be? What's the weighted moving average? You got an 8 moving average, EMA, and that kind of stuff. Well, you've got a weighted moving average as well. So let's go see what it is. And I use weighted moving average for a reason. I use a whole moving average for the short time frame, and that's for a reason. They work a lot better than using an EMA or even an SMA. So let's take a look at that real quick. Let's go over here and we'll go to customize. I'll say, what is the best parameter to use here? So I'm going to say, okay, hold on a minute. Well, why don't I optimize this? And let's look at between 96. I say it's supposed to, before I got into this, I used a 220 or 233 moving average. And so I go low just to see what it gives me. And then I go a little bit higher. And I say, let's increment this by 1. And let's test out this strategy on all of the moving averages between 296 and 286. Then I click OK. Now I'm not going to do that because I've already done it. And I'm going to pull them over from the side and show you what you're going to get. Okay? So, let me just leave that over there. Let me just bring this over. It's going to be hard to see because it's the only way I wanted to capture it so you could see the whole thing. Now, increase your screen and then you'll be able to decrease it. But these are all the things that you can do with it. It's going to go through and test it's going to change that parameter to every single one of these, and then it's going to tell you how much profit you would have made in the last 2 weeks if this was at 192. How many trades you would have taken, and what is your percent of profitability. Now, this one is ordered right now in the price by net profit. So, and you can keep going across here. We're not going to look at all these. We will down the road, but we're not right now. The 3 I pay attention to are the net profit, the total trades, and the percentage of profitability. I usually make my decision on the percentage of profitability. You'll see that in a couple minutes. So it tested every single one of these. Now, look at how far it goes down. Okay, so I just took a picture. So it goes down to profitability of 15,390, 170 trades and 61%, and this goes up to, and it chose 94. It said this is the highest percent of profitability, and it's 62% profitable. So it's interesting because I used to use 233. I thought that was the right number, but it wasn't. This week it's 94. Next week it'll be something different. But it looks at the environment that the market was in at the time, and it tells you if you would have used this and the market stays the same, this would have been your profitability for those 10 days. Okay? Now, when I look at the same thing from the perspective of the profitability, in this particular one, it comes out the same, right? We look at profitability, it's 193 or 194. So 193 gets us 62% profitable. Now let's keep in mind, at a 2-to-1 ratio, you only need to be 31% profitable to break even. So 62% is really good. At 62% of 175 trades, we're profitable. Doesn't tell you how much profit is that we're profitable, and which is really what I look for, and you'll see that here in just a minute. So then another one we look at is the HTMFA candle and threshold, which is how many candles do we look back? Right now it's 13, and we look for a threshold of 4. If I look at that here, 13 and 4 is what we came up with, right? Because that's already been optimized. It's a total of 184 trades, and we're 62.5% profitable. Now you can go all the way across this and look at how many losing trades you had, how many max losing trades, how many losing trades in a row you had, what was your ratios, all the way down to your max drawdown per day. But nonetheless, we're looking at 13.4 net profit, total trades, and percent profitability. That's what I'm looking at. Now, if I look at and that was from the profitability, we made 17,000. If we look at it from the percentage point of percent profitable, it's the same thing, right? If we went from 13 and 4, we were at the same percentage of profitability. So 13 and 4 it will get you into more trades in different trading areas. That's one reason that I would have stuck with that. Okay, let's go to another one. Let's see what's the next one on the list is set profit target. So that's a good point. This is a good one. Now, when I exit a trade, I exit the trade right now. It's set to 223. So I'll trade until it hits $223, and then I'll get out of the trade. You can't get greedy. How many times have that caught you? How many times have that bit you in the butt, right? So I have a circuit breaker stop at 194. So that says is, if I ever am losing more than 194, negative $194 in profit, take me out of the trade. I'm done. And then the set profit target is if I ever make $223, take me out of the target. I'm done. Take me out of the trade. I'm done. And that comes from these areas. So we've got the circuit, the profitability itself. It went out and asked every single. It did okay. If I stay at $503, I'm profitable 20% of the time. I'm 49% successful, and I got 159 trades. Right, that's the highest profitability for net profit. I should be 503, and then it goes 513. It's hard to imagine. You get more money. The more money you have is the higher numbers. That could be true, but you're trying to build confidence, right? If I want to make more money, I buy 2 contracts. It's just that simple. You don't make twice as much money, but you get pretty close. So, but I want to look at the profitability. What's the percentage of profitability? Because if I can be I have a high percentage of profitability, but still have a decent net profit that I can live with, then I'm going to go with that. Now, let me see what happens there when we do that. Okay. So when we do that, we come up with making $12,000. Is that right? Yeah. This is a percentage of success. I'm sorry, I got that cut off, but that's the percentage of success is right here. I'm sorry, it's right here, and the number of trades is right there, and the profit is there. So do I want to make $20,000 and be right half of the time, or do I want to make $12,000 in 2 weeks, or somewhere thereabouts in 2 weeks, and be profitable 65% of the time, but I'm in less trades, and I have a higher level of confidence that the trade will play out positively. That's what I do, right? You can do it any way you want to. You can use any of these parameters to set it by, but you'll see that I went with, I think it was 233, right? Right here's 233. I'm making 17.4 instead of 20,000, and I'm in 186 trades, but I'm still profitable 64.5% of the time. So what does that tell you, right? Right there is your answer. 65% profitable, and you're only losing out on $3,000 in 10 weeks, and that $3,000 is what, 15%. So you're losing 15% of the total profit, but you're right 15% more of the time. That's why I use this, and I think we set it at that. Now look at this. If it's 233, it's 17,464. It only goes up to 138. It goes up to 65%, but there's just a lot less or a lot more trades, so you make less money on each one. I think that's what I had it set for. Let's just double check me. 223. Yep, that's right. So we had 223. I went with 223 right there. Made 16.7. That wasn't 233. My mistake. 223 made 16,000 on it and was 64.8% successful. That's what I chose. Now, if I wanted to make more money, I buy more contracts. That's where futures is so valuable. Is you can say the same thing about stocks, but you don't buy one extra share of stock and double your money, right? It just doesn't work that way. It's not leveraged like that. So let's look at a couple more. So you saw the 233, and then 194 is my circuit breaker. So what this is telling you is, if you just take $223 out of the market, you're still going to do very, very well instead of trying to get that long run. The long run, I found out, I didn't believe at the beginning, but I believe it now. The long run is not as valuable as getting in on the dips, right? Getting in and out when it comes back, right? When it comes up to here, getting your profit. When it comes up to here, okay, this is a loss, but getting your profit. So when you do that more often on a 610 tick chart, you'll make more money than you will if you just try to hold it for to go long. Like I did a short here, I barely made a profit. I'd have to go look and see what that profit was. It's probably it might have been $200. No, that would have been 233 because it says profit. So otherwise it would have said cross. So let's go back and look. So let's look at the circuit breaker stop now. So looking at it from a net profit perspective, if I set it to 194, I make $17,300. I'm 65% successful, right? That's what it said. Now, if we peruse down through here, there is a big difference. Well, there's $1,000 difference. And it goes a little bit further than that. There's about $1,000 difference. Now, this is my artificial stop, right? We know that my hard stop is always at the bottom of the either it's the bottom of the Donchian channel or the top of the Donchian channel. Depends which direction I'm going. We remember that, right? Well, I'm going to get out at $194 or that stop, whichever is hit first, right? I'm just saying I don't want to lose more than $194. That's just it. Okay? So if we look at that, and that's what we set it for. Let's go look and see what it was if we look at the percent success. Look at that. Lo and behold, 194. It's same thing. And this will go all the way down to 14. It will go all the way down to $14,000 is what I think it does. But I just took a picture of this so I could show you. Okay, so let's go look at RSI. I wanted you to see this because you remember RSI, right? RSI is the study of relative strength and to identify whether it's overbought or oversold. Now, these are the parameters they set you in automatically. They always say 70-30 and back 14 candles. Now, I still go back 14 candles, but I'm not sure oversold or overbought. Those should be the numbers. So when you're oversold, you don't want to go short. If you're in this case, if you're under 30, you would never go short. In this way, if you're over 70, you would never go long because you're overbought. And that's what these are down here is 70 and 30. If I'm ever above this 70, I would never enter a long trade, right? And that's built into my system right here under rules. RSI rule is turned on. That enables me to turn it on and turn it off if given market demands. Then there's an RSI high and an RSI low. If this is turned on, then I can optimize it. I'll show you how to do that. It's a little different. So I would edit my studies again. Strategies rather. I would customize. And I would come down here to where RSI rule is turned on. Then RSI high, I would optimize it and say, test everything between 50 and 70 incrementally. Do 51 and 70. Or 51. Tell me what the profit and loss would be if that was 51, if it was 52, if it was 53. Give me the profit and loss for each one of those. This one here, we do at the same time. And what it does, it compares itself to each other. So we say between 30 and 55, tell me where the profitability is. So this would be between 30, this would mash up against that one. And it takes a long time because it does every combination that you can have in this one with every combination you can do with this one. Okay? That's what we're doing. So we're trying to find out what's the best area to optimize it. So let's look at from the profit perspective. Let's look at this. Okay, so if I have my RSI high, my overbought at 58 and my oversold at 46, I make the most money. I'll come back to 70-30 in a minute because this is important. A lot of people turn on the indicators and don't change the standard. The problem I'm trying to tell you is that standard is never right for my strategy, ever. So if I just used it as it sat, as they said to, it would always, I wouldn't even take a trade, I don't think. So if it was 58 and 46, that's my best profit. And my percentage of success is down here. Look, see where the profit is up here? But my percentage of success goes up to 71% if I'm 55 and 53. And I'm pretty sure I came down and did, let's see which one I chose. 58 and 46. So I chose 58 and 46. That's the wrong one. There we go. 58 and 46 is what I chose. So let's come down here. 58 and 46. Where's that at? It's all the way down here. So I went for the profitability. Because there's only 5% difference between here and there. And there's also $6,000 difference between the 71 percentage area and the 17,000 percentage area, right? So I chose the dollar signs in this one. Now, if I would have chosen 70 and 30, here's 70 and 33. It would have been 11,000, 57% successful with 211 trades. So this is what, if it was 70 and 30, if you used it just like they tell you to in class, just like they tell you to everywhere, just turn the indicator on and use what it says. That's the best. It is not. I'm just telling you right now, it is not. If you don't have a system that you can test it with, though, how do you know what it needs to be? Because this one roughly, these RSI is roughly between 58 and 44, somewhere in there all the time. It's never 60 or above, and it's never 40 and below. So it's usually right in between there. So I would never use 70 and 30. 70 and 30 didn't come out on the thing because of the way we were doing it. It was so 70 and 30 did not give us a good feeling, right? We're down $6,000. We're losing 8% difference in what we had. So we would not want to go with this. Again, that just tells you what what the standards are. It tells you this is what the standard will buy you. So I never use standards anymore on anything, quite frankly. I find ways to optimize it through one of my systems. So let's go back and recap real quick. Okay, so let's go back and recap. So basically, when we look at these parameters right here, when we set the high time moving average frame at 191, it looks back 13 bars, and if it's above 4 degrees angle, it'll be green, so I can go long. Between 4 and -4, it'll be blue, so I can't do anything, and -4 and below, it will be red, and I can only short. Right? That tells me that I'm in the trend. Right? I'm in a strong trend. All these parameters can be tested just like that. You can tell when the best time of day to work to trade is. Right? We can come down and talk about all kinds of different things. But all of these parameters are optimizable. Now, there's 12 other indicators in my strategy that's hard coded into the strategy. I took every single one of those through this process till I got to a point where they were just always the same. It just were very seldom changed. So I picked the average and standard, made a standard out, and put it in and just hard coded it into the strategy. Don't let the software scare you. There's many ways to get this coded. Now with AI, there's a lot of different ways. So anyway, so you can see how valuable this can be, right? This is just awesome. It's an awesome way to tell what the right parameters need to be to make the most money and or the highest percentage of success, right? So that's it for this one. Now we're going to start working on the individual indicators themselves, what they do, so you know it. Deep down, you know exactly what it does. You know exactly how to use it, and you have confidence in it. We're going to start with the confidence builders first, and let me just go into that here real quick. Okay, coming up, we have got the next two episodes defined. So the next episode is going to be about market depth, which is what we see right here on the left-hand side. So market depth and the candle X-ray are both two tools that I use while I'm trying to make sure I have confidence in the direction of my trade. Okay, so what I want to do first is build confidence. So these two indicators are awesome when it comes to building confidence for a trade that you're in. The market depth itself is, if you think about it, it's the matrix turned on its side, and this is current price right here, and these are the number of bid contracts that are in the pipeline, and over here is the number of ask pipeline or contracts in the pipeline. So when the number of asks gets much more out of balance, or I'd say has a higher imbalance than the bids, the price is going to go up. When the bid has a larger number of contracts in the pipeline, the price of the trade is going to go down. Not the price of the trade, rather. The price itself is going to go down. You'll see right here, right next to the current bid, is a long list of contracts that are waiting to go take its place. So there's a lot of volume getting ready to enter into this trade to the downside, because this is on the bid side. We'll go into this in much more detail, but this indicator helps me have confidence that I'm on the right side of the trade, and it will tell me now and when we look at it, there will be times when it doesn't make any sense whatsoever, and those are times of balance is what I call it. But you can clearly see the imbalances as well. It happens very quickly, but if you get accustomed to using this, your eyes will get reset and you'll be able to see it like I see it as well. This is what they call reading the tape. This is used to be called reading the tape. And the next episode we're going to be looking at is the candle X-ray. Now, the candle X-ray, basically what this is a proprietary indicator that I designed to help me understand what was happening inside the candles. Now, you can see the candles build, but you don't know the volume that's taken place within that candle. So that being said, what I'm doing down here is I'm looking at the volume of buyers versus sellers. The volume, not the number of price changes, which are ticks, which is what we see up here. But within this candle, let's just take this one for example. We can tell, we know price came from this red candle to the green candle, up and down, and over this red candle, then it fell, right? But why did it fall? Did it fall in volume or did it not fall in volume? It can fall without being any volume there, right? It could fall all in just several different ticks. So we want to know how much volume took it down, because that helps us understand whether it's strong enough to maintain the trend we're expecting to see. So I use this, as you can tell, to watch my trade, and it gives me confidence. It really does. Now you'll see this on this particular trade almost stopped me out by probably a tick, because my stop would be right up here. But I can also tell it did not go up with a ton of volume either. There was not a ton of discrepancy between these. So it went up on low volume, so that gave me confidence that it wouldn't go very far, right? So long story short, this is what we'll talk about in the episode after Market Depth. So please like, subscribe, and share this YouTube channel. This is very important to get to build the community so that we can get ideas from other people. We can get input from other people. We can have questions from other people that want us to do an episode about a particular strategy, indicator, or whatever the case is. So please like, share, and subscribe to this, and we will see you the next time. Happy trading.